Hey there everyone, Dave Keller here with Market Misbehavior. I hope you've been enjoying my live market recap show called Chart This with Dave Keller. It runs every day after the close, a live streaming on YouTube, on X, on LinkedIn, on Facebook. I did an all mailbag edition earlier this week, and one of the questions was particularly about volume. And while I don't use volume very often, there is one indicator that I found pretty helpful called the Chaikin money flow. I talked a little bit about it on that episode, but today I wanted to dig a little deeper into what this indicator is and why it could be very valuable. So this is the one volume indicator I definitely would be following. Before we get to that chart and a good explanation, here's one more thing I wanted to tell you about. I spent many years earlier in my career working for large financial institutions, and when I left the institutional world, I remember thinking, what am I going to do to replace these big, expensive, but powerful institutional investing platforms that I've had access to this whole time? There is an option now for individual investors and financial advisors, and it's called Koifin. Koifin really combines some of those great capabilities of the big, expensive institutional platforms, along with some capabilities really optimized for financial advisors and high net worth individuals, and puts it in a very low cost, underpriced package on a web-based platform compared to the possibilities that you can achieve by using said platform. One of the features I love to use on Koifin are the ETF holdings. You can take an ETF, you can, like the QQQ, you can look at the biggest weightings, you can look at weightings by sector, you can run some basic attribution analysis. So for ETFs that you own or that you're considering owning, doing the due diligence of really understanding the exposures you're going to get is super important and super powerful for your portfolio. If you go to marketmisbehavior.com/Koifin, you can get 10% off any new membership. I hope you will check it out, and I hope you will find it as meaningful and powerful and impactful as I have found myself. Now let's get back to the charts. All right, so the short answer to, Dave, do you use volume often? And the answer is no, I really don't. And back in the day, I used to when I was learning about technical analysis in the early 2000s, I was really introduced to the concept of volume, and it made sense to me. But over my career, I've certainly seen the way that stocks are traded, the market participants and their motivations, honestly, the market structure with dark pools and electronic trading, that whole transformation with decimalization, et cetera, et cetera. I think a lot of volume indicators that had a real purpose have been less valuable. Now, one of the main ways that I was taught to use volume is to just look at volume confirmation, right? If something like the S&P or whatever stock or ETF we're looking at, if there's a big move, glance to the bottom and see if there's significant volume. So the most simple way to think about volume analysis, honestly, is just looking at the daily volume. Here on stock charts, I'm color coding the volume green for bullish days and red for bearish days, meaning if we closed higher than yesterday, that's a green bar. We closed lower than yesterday, that's a red bar. And it's intended to help you identify clusters of volume. Like here in mid-April, we can see there was a pretty good sell-off. That was the first major pullback in 2024. You can see that for about a week and a half, just every day, closing lower, heavier volume. You can see capitulation as well, so an acceleration of bearish volume going into the low in August. And honestly, you do see a bit of a divergence with the market going higher so far in the month of October 2024, but the trend in the volume kind of lightening up. But that really is a very simplistic way of thinking about volume, and it's really just taking a daily snapshot of the volume readings. So a couple decades plus ago, this is probably, I don't actually even know when this was created, maybe 50 years ago would be a guess, in the 1970s. But Joe Granville, who's a famous market strategist and back in the day had market-moving possibility or potential when he would make a bold statement about the market direction, he came up with the idea of what he called on-balance volume, which is kind of like taking a cumulative advanced decline line for daily breadth data, kind of a similar concept, but using it for volume. So if we close higher than we did yesterday, that day's volume is added to a running total. If we have a down close, that day's volume is subtracted from the running total. So you can see the same chart kind of mid-April where we have those a bunch of days going down. The on-balance volume is trending lower because we have a lot of down days, and so the every day's volume is subtracted from the total. when the market starts to rally. Even if the volume's lighter, the trend in the on-balance volume is going up because every day we're adding some volume to this running total. Now that is an improvement, right? Because now instead of just looking at a daily snapshot in volume, we can actually look at the trend in volume and look over a course of days or weeks or even months. How is the volume picture changing? And this can be pretty helpful at looking for divergences or looking for some sort of confirmation. For the record, still not going down at all here in October of 2024. The problem there is it treats an entire day's volume as either bullish or bearish, right? So every trade that happened was either a thumbs up or a thumbs down for the indicator. And that obviously does not seem particularly appropriate to make sense of the nuances of volume. Enter famous market strategist and technician Mark Chaikin, who improved on that, I would argue, by creating what he called the Chaikin money flow. And what this does is basically look over the last month. And what it does is it looks at today's volume and looks at that relative to the volume over the course of the month as a way of standardizing things. And if you're familiar with technical indicators, the stochastics indicator is built on the idea of you have a trading range, and then you look at where we closed within the range. So if we close near the highs of the day, that's more bullish. If we close near the lows of the day, that's more bearish. And stochastics actually has a series of moving averages and stuff that kind of look at that trend over time. Chaikin's innovation was applying that approach, that theory, to volume. So basically, wherever we close during the range, if we close more toward the highs of the day, then this is bullish volume kind of going from the low up to the close, and this is your bearish volume going from the high down to the low. And so the stronger the up close, the stronger the bullish improvement to the indicator based on volume. If we're closing more near the lows of the day, then that's mostly bearish volume on each day. So each day is a little more dynamic, and by standardizing it over time, we can start to look at the trends in the volume, but normalized based on the strength of each individual day. Now, how do we actually use this indicator? Two main ways that I've come with it or come to use it. You can see at the top here we have a daily chart of the S&P 500. That same volume, raw volume data in the background, just for reference. And at the bottom we have the CMF, the Chaikin money flow, and it's looking at a 21-day look-back period. If the indicator is green, overall it's bullish volume. If the indicator is red, it's bearish volume. Instead of being like a volume number where it's looking at actual shares traded, this is going around a zero line. So above zero is bullish, below zero is bearish. And so when we cross above or below that zero line can be a pretty meaningful signal. And I found especially after an uptrend, sort of at the later stages of the bull market, when we have that initial sell-off, a lot of times we'll sell off, meaning we close down near the lows, and if the volume's strong enough, it will make the indicator roll over. So it really is measuring accumulation and distribution as implied by the volume reading using the math that I shared earlier. So we can see, like in early August, just after the market peak, maybe a week later, it went below the zero line. Here in late March of this year, right around the major top, we can see it went below zero. And then here in mid-July, it cut below zero as well. So not bad in terms of identifying, changes in the volume structure. And obviously big distribution days have a big part of that. And at the beginning of a sell-off after major top, you often have big down days on heavier volume. And this is what this is meant to capture. But here's the real reason why I would suggest we follow this chart going through Q4 of 2024. Look at the red arrows that I've added to the bottom indicator. That shows a bearish divergence where the market is still going higher, but the Chaikin money flow is trending lower now. How would that be? Well, remember how the indicator is constructed, right? Every day, where do we close versus the high and the low for the day? So if the trend is still going up, but if we have some days where we're closing near the low and the volume is strong enough, the indicator is going to pick up on that distribution and start to turn negative. So even though the price is still going up, it tells you we're having some down days along the way where the volume is enough that it tells you that at least someone's trying to unload shares into this strength. And sure enough, look at the bearish divergence in mid to late July going into the top. Look at the divergence in March of 2024 going into the peak. The divergence here in early July of this year with the price going higher, the indicator going lower. These last couple of signals have been fantastic about recognizing a big change. Now, what does that mean for October 2024? Look to the right side of your chart. We do not have a divergence yet, so be clear. Do not go to your friends and say Dave Keller announced on YouTube with great fanfare that the volume was diverging. It isn't yet, but this is why I think this chart is so important to watch. As we can see from some of the major tops we've experienced over the last 12 months, that higher price action with the indicator rotating lower is the signal, I think, to look for. It's often a leading indicator of a major top. So even if we continue to go higher, with which this week we obviously finished in a position of strength, watch the chicken money flow to see if it starts to trend lower. And when it does, that could be a strong indication that we are approaching a major market top, as has happened many times in history. What do you think about this indicator, the Chaikin money flow, and how I've applied it to the S&P 500? Do you agree with my assessment that divergence in volume could be an important signal? What indicators are you watching to try to navigate a market top? Drop a comment below and let me know. For Market Misbehavior, I'm Dave Keller. Remember, it's always a good time to own good charts. Thanks.